Hi everyone, welcome back to another episode of Charting Markets with Jeremy. For today, let's take a look at the US dollar, mainly the US dollar index, the DXY. So looking at some longer term data over here, we seem to have identified some interesting cycle that is currently in play right now. So let's just jump straight through to the longer term time frame chart first. On the screen here, we are looking at the monthly time frame. And this data, as you can see, goes all the way back to 1976. So interestingly, what we noticed was for the US dollar, it tends to actually form a cyclical top in between every 8 years, which we call this an 8-year cycle for the US dollar. So in between every 8 years, you can see I've marked up here on the chart, the vertical line are the points where the dollar index actually forms a cyclical peak, and after which entering into a circular bear market. You can see each cyclical peak, the duration actually takes around on average 8 years to form. And once the cyclical peak is formed, the dollar index tends to actually slip into a rather sharp bear market for a good, on average, 3 to 5 years out. So let me just run straight through very quickly what the charts show. So you can see over here, the first cycle happened actually in 1985. Where it took around 8 years and 8 months to actually form this cyclical peak. And once the cyclical peak is actually formed for the dollar index, you can see the first bear market actually took the US dollar index down roughly about 50%. And it tends to actually retest the previous cyclical low level in each bear market that we saw. So you can see this 50% decline in price here for the dollar index actually retested this previous low that was set back in 1978. And fast forward again, the next cycle over here, you can see the dollar index took around 8 years and 11 months to actually form the next cyclical peak over here in 1994. And this time around, the bear market was slightly weaker, down about 17% or so. But do know that you can see this particular sell-off again, we tested this previous cyclical low that was set back in 1992. And all in, we kind of identified another interesting observation here was that it tends to move into this bear market where the first leg down is a larger sell-off, 50 or 30% or more, followed by a slightly lesser magnitude of a sell-off here with a 17% pullback. And you can see then after which the next cycle, we went through another large leg of sell-off here, 33%. Followed by another marginal one at 17%. That was the more recent one in 2009. So all in, you can see here, what it means is the current cycle over here would likely indicate that this current leg of bear market would be the larger sell-off period here, like the one in 85 as well as 2001. And henceforth, the current cycle actually took around 7 years and 10 months to play out, where the cyclical peak has already been confirmed and identified here back in January of 2017, and the high was actually at $103.82. So since then, you can see the dollar index has been pretty much moving in line with this circular bear market that we have just mentioned, in line with the 8-year cycles. And looking at this current leg lower, I think for this 8-year cycle to actually complete itself, I think the dollar index would likely once again retest this previous low level of 2014, and that will bring us down to a range of around $80 for the US dollar index, which means there could still be around 14% downside here, possibly over the next 1 to 2 years out for the US dollar. So that is the base case. I think probably the more severe bear market could actually even take the dollar index down to retest the 2011 low, and that could be a range of around 75 for the US dollar index. So that's the view that we have for the dollar index, at least from a longer term perspective, looking at the cycles. Right now, if I were to show you the near term outlook, let's jump straight through to the current outlook for the dollar index. On the chart over here, we are looking at the weekly time frame. So you can see here, probably after going through this rebound over the past 5 to 6 months or so, right now we are once again trading right at a key ceiling, key resistance level. Firstly, mainly this resistance back in September of last year. You can see this high was actually at $94.50. You can see the current price action is showing the bears are returning to the market right at this level of $94.50 mark for the DXY. And also at the same time, you can see the green dotted line, which is the 200-day moving average, is also acting as an additional resistance here for this particular move currently. And if I were to plot the Fibonacci levels, you can see the dollar index is also bouncing off at the 38.2% level here right now, which once again shows us that the general trend is still moving very nicely in a longer term downtrend. So this is the 38.2% Fibonacci retracement level that I'm talking about, right smack at where we are, near the resistance of $94.50. So all in, I think the key resistance here is rather strong, and we'll likely see the dollar index turning down from here, as shown by the current bearish price action on the weekly time frame. If I were to go on to the daily time frame, you can see there is a possibility that a double top could be forming here, mainly at the resistance that I talked about at $94.50. First top that was formed back in September of last year, and then the more recent one, you can see here a consolidation took place sometime back in late September, and then after which we saw some bearish price action following through here just recently. And this bearish engulfing bar over here could actually indicate the current top that we are seeing here for the dollar index. So if this plays out the double top formation that I just mentioned, then the dollar index could likely see further downside here in the near term, possibly down to around the $91.50 support level, all the way down to around $89.50 mark, probably over a time frame of 2 to 3 months out. So all in, you can see right now the near-term outlook for the dollar index looks like it's topish. And also, like I mentioned, on the longer-term perspective, the 8-year cycles, it does suggest the dollar index could still see some further downside to the $80 range, representing about 13 to 14% downside for the dollar index. And all in, I think that is the view that we are seeing right now, where the dollar index could be heading down lower from here on out. Yeah, so that is pretty much all I have for today, and we'll see you guys in the next one.